Good morning and welcome to the Energy Perspectives Group webinar hosted by World Copper. This event will be recorded. During the presentation, all participants will be muted. If you have any questions you would like to ask, please type them into the chat feature. We will read and answer questions at the end of the presentation. Thank you so much for joining us today. Now here is Dan Steffens, who will introduce today's speaker.
Hey, welcome everybody. Thank you for attending the live webinar. This is going to be recorded, and then we will send the link to the recording to all of our global members. Anyway, but before I introduce today's speaker, I want to remind everyone that we live in a world that is rapidly expanding the demand for electricity. Earth's human population is approaching 8 billion people, which compares to approximately 2.5 billion humans alive on the day that I was born in 1954. I actually found a website. You can put in your birth date and it'll tell you the Earth's population on that date. People all want a high standard of living. And that means more demand for reliable electricity, most of which will be generated by burning coal and natural gas. And it also means a lot more demand for copper. I am bullish on copper and other strategic metals that will be in high demand as people continue to use more electricity in their daily lives. The increasing number of electric vehicles is just part of the expanding market for copper. It seems that everyone feels a need to be connected 24/7 to their friends and family via device connected to the internet. Grade school students now spend half of their time in class on a tablet. All of these devices contain copper. Providing reliable electricity to populations in developing nations will be the primary driver of higher demand for copper. Demand for copper is expected to double from 2020 to 2040 and triple by 2050. This world will need a lot more copper mines very soon. 4 months ago, copper futures traded at an all-time high of $4.90 per pound, up from $3 at the beginning of the year. The chart of copper prices looks a lot like a chart of oil prices. Concerns over the spread of COVID caused the price of copper to pull back to $4 in mid-August, but it has rebounded back to $4.25 today. I believe that copper prices will move quickly over $5 a pound in a post-pandemic world. Our speaker today is Nolan Peterson. He is World Copper's CEO. World Copper Limited is a Canadian junior mining company based in Vancouver. It is focused on the exploration and development of 2 copper projects in China and in Chile, and 1 in Arizona. Nolan is an engineer and finance executive with an extensive career in project development, corporate finance, accounting, engineering, and project management in the mining industry. He brings a strong technical and financial background to the company as he holds an MBA from the University of British Columbia's Saunders School of Business and a bachelor's degree in metallurgical engineering from UBC. He is a CFA charter holder, that's like a CPA in Canada, and a licensed professional engineer in British Columbia and Ontario. Okay, so I want to remind everybody, during the presentation, if you have a question or comment, just please type it into the chat box and we'll cover it during Q&A after his presentation. So now I will turn it over to Nolan for his presentation.
Thank you for the introduction, Dan, and thank you everyone for attending the presentation. So I will, as Dan mentioned, my name is Nolan Peterson. I'm the CEO of World Copper. I will talk a bit about myself first, just so we can get to know each other a little bit better, how the company was formed. I'll mention a bit about the macroeconomics for copper, as Dan mentioned, and I'll expand upon those and where we see copper going. And then I'll discuss our projects, which I think will be the most exciting part of the presentation. Let me start with how the company was formed. We have a gentleman named Hank Van Elfen, who is our chairman. He has an extensive history in mining. He started many companies, but one of his first companies he started was Corriente Resources, which was a copper company in the early 2000s. He took that company from around 10 to 20 million Canadian and sold it to a Chinese interest for about 800 million Canadian. He also started a company called International Tower Hills Mines, which was a gold mining company. And as chairman of that company, he took it from, again, 10 to $20 million to a market cap of over 1.3 billion at one point. He's friends with a gentleman named Marcelo Awad, who is the former CEO of Antofagasta Minerals in Chile. he was successful in that role and took Antofagasta from a $4 billion market cap to a $20 billion market cap. So these two gentlemen are involved in another one of Henk Van Alphen's companies called Wealth Minerals, which focuses on lithium in Chile. And they understood the strong coming demand for copper. They wanted to be a part of that. And they said, let's see what assets we can find in Chile and let's start putting a project around those. So that's where we are today. We have a project, 2 assets in Chile. One is our flagship Escalonas. We're also in the process of merging with a company called Cardero Resources, which has the Zonia Project in Arizona. And that is a project that is more ready for near-term development. And that's where I come in. My background is project development. As Dan mentioned, I'm an engineer by background, a metallurgist. I spent the first 5 years of my career working for a company called S&C Lavalin, which many of you may be familiar with. They work in multiple jurisdictions, but one of their main focuses and what they're well known for is mining. Worked for clients such as Newmont, Rio Tinto, and Barrick. And I had a great deal of experience as a junior engineer working on project valuation models, feasibility studies, in-field commissioning work, construction work, technical design work as well. After that, I went to work for New Gold, which is an intermediate Canadian gold producer, working on the Kamloops New Afton Copper Gold Project. That project was an $800 million Capex project, and I was involved in the construction and commissioning of that and bringing it into operations. After that, I went to join the corporate project development group for New Gold and worked on a pair of, again, billion-dollar projects, the Rainy River and Blackwater projects. Rainy River was ultimately selected for construction. This project is based in Northern Ontario, and that project was built I was involved in building and constructing that. Along the way, I picked up a CFA charter. Sorry, Dan, just to correct you, I'm not an accountant. CFA charter is a chartered financial analyst, so it's a different designation, but I don't want people to think that I'm an accredited accountant when I am not. But I also picked up an MBA. I have worked in accounting for the last 5 years, accounting and finance, and I have spent a great deal of time in corporate governance, corporate management, budgeting, planning, strategy, et cetera. So my role and why I was brought on by Henk is to be a gentleman who can bring this company forward on the development path for our Zonia project, which I think is a key differentiator between us as a junior mining company and many of the other juniors that you may have heard from or looked at that are focused on drilling and exploration and have no intention of development. So why do we want to develop our assets? As Dan mentioned, copper is going to be a strong growth in demand and a lowering of supply over the coming decades. This is a graph that I like to show here, which shows the copper grades of over the last 30 years. Global average has declined by almost 50% in the last 30 years. What that means, of course, is when you think about it, that's double the cost basically from production right off the top. Obviously, economies of scale, but for the most part, you're looking at moving twice as much material, processing twice as much labor, equipment, water consumption, et cetera, for that same pound of copper. We also have a growing demand for copper from infrastructure, mostly is electric vehicles. I ask people on the street and also, well, my friends, and also sometimes when I meet new people, I ask them, I say, what do you think about when you think about electric vehicles? What do you think there's a lot of copper in them? And they say, no, there's lithium, there's carbon fiber, there's futuristic metals, cobalt, nickel, et cetera. Why would we use a dirty metal like copper in an electric vehicle? Then I tell them the fact that copper is actually used 3 times more in an electric vehicle than an internal combustion engine vehicle. And their eyes open wide and they come to the realization that copper is going to be a very big component of the so-called green revolution that's coming. Of course, all the electric facilities such as solar power and wind turbines also use a great deal of copper, and that is going to grow the infrastructure demand for copper in the near future. This is a graph that comes to us from Goldman Sachs and S&P Global, where they project the copper production deficit between demand and supply by the end of the decade. And this is not considering price. This is simply whether we have enough copper coming online or having the potential to come online by the end of the decade. And you can see there's a substantial gap, and that is not even factoring what I would consider a very moderate increase in demand curve. I would expect that curve to be a fair bit steeper, but just using a conservative growth and demand curve, you can see there's a substantial gap. This leads analysts such as Goldman Sachs to forecast potentially a $15,000 per ton price for copper, which equates to about $7 or so per pound. And as Dan mentioned, we're at $4.25 today. So that is why we are aggressively pursuing a growth strategy to acquire assets and to develop them. Our main focus is, our main Chilean focus is the Stahl and Escalonas projects. Chile is, of course, a premier mining jurisdiction, especially for copper, holding over 30 to 40% of the world's resources and reserves and production, as well as the world's largest copper company, Codelco. Stahl is a project near the Peruvian border. It would be, I would say, a lower priority project for us at the moment because we have the great Escalonas project, which I'm happy to talk to you about. But I will mention Stahl for completeness. This has the potential to be a large-scale copper porphyry target. It would be a so-called buried deposit, though, under a few hundred meters of cover, which may be the future of copper discoveries, as most of the near-surface deposits have already been identified and scooped up. So now we're going to be looking for deposits that are undercover that people have previously overlooked. Our geologists believe there's a potential here for this discovery due to following the West Fisher Fault in Chile, which is the geological phenomenon that has spawned some of the world's largest copper mines and has endowed Chile with a great deal of copper. Following the pattern, Stahl is right in a prime area for a future mine discovery, and there are players such as BHP that have had discoveries in the area as well. But I would like to focus on the Escalonas project, which is our flagship project. Escalonas is in the Santiago region of Chile. It's in an area of good infrastructure. It's 100 kilometers southeast of Santiago and 35 kilometers east of El Teniente, the world's largest underground copper mine. There's good road access, there's good power line access, there's proximity to major seaports, as well as a gas pipeline crossing the property. So when you're looking for a mining project, this is the type of infrastructure you want to see. I will talk quickly about what has been drilled so far. 25,000 meters has been drilled on Escalonas to date. Everything that has been drilled to date is within that orange circle there. Immediately to the south of that, we have what we call the Mancha Amarilla target, which is an expansion target, which I will discuss in a second. We also have 3 targets to the northeast, which are copper porphyry targets. So there's a substantial potential for future discoveries here. But with that being said, we have a very large resource in place at the moment. Last year, we prepared a resource statement. This is prior to me joining the company, but we prepared a resource statement which had a copper resource of over 400 million tons, grading at a copper equivalent of about 0.4% copper and a total copper equivalent of about 3.8 billion pounds. So at today's prices, say $4, you're looking at about $16 billion in the ground. Now that was a sulfide resource. So for those who are unfamiliar with the difference between sulfides and oxides, we prepared this quick slide, which I'll go through briefly. Sulfides are the largest source of copper from mining in the world, representing between 60 to 70% of the global supply. The rest comes from oxide heap leaching. Sulfide flotation is how you process sulfide materials. You grind the ore, crush and grind the ore, and then you float it. This requires substantial infrastructure investment. Initial Capex also requires substantial operating costs, substantial water consumption. And for those reasons, it's more expensive to get started. You'd be looking at $2 to $3 billion for a moderately sized sulfide operation. And then you would be looking at an operating cost in the $2 to $3 per pound range. And then once you've done that and you produced your flotation concentrate, you've only produced a concentrate of 30% copper, which you put onto a boat, ship it to somewhere in China or South Korea typically, and then they produce copper that is usable in industrial processes through smelting, of course, which is also a dirty process where the polluting effects are a little bit hidden because we don't see them traditionally in our Western markets. So what this also means is because you're using significantly more water, the permitting process is longer and you need to permit a tailings facility and build it. On the In contrast, oxide heap leaching is processed oxides are processed through heap leaching, which uses sulfuric acid and then an electrowinning process to produce copper. It's a much cleaner process, uses substantially less water, and produces 100% pure clean copper, and the infrastructure costs and operating costs are lower. Now, why wouldn't everyone use oxide heap leaching? Of course, you're limited by the amount of material near the Earth's surface that can be oxidized over the millions of years required. So the sulfides come to the surface and then they're oxidized into oxides, and this allows them to be processed in this manner. What we did over the last year is we focused on our oxide layer at Escalonas, and we ran sequential leach tests on it to determine its amenability to heap leaching. We found that the oxide layer had a 71% recovery, a theoretical recovery, of course, through the sampling, and that gave us good hope to produce a resource statement for an oxide. What we found was the oxide resource at Escalonas is 426 million tons at a grade of 0.37% for 3.5 billion pounds of copper in the ground, and that's with a strip ratio of below 1, so 0.93. This changes the project now from a sulfide project doing large-scale bulk tonnage, low grade, low mine life sulfide operation, which would require expansion to become viable, to a large scale, long life of mine, high grade oxide deposit, which is now ready for development. And I want to emphasize this. I want to show you just what changed 2 weeks ago. These are mines in Chile that are held by major producers at the moment: Codelco, Glencore, names you're probably all familiar with or have heard at least briefly. You can see that these mines are oxide operations. Their grades are lower for the most part than Escalonas. And then that 400 million tons of Escalonas is right within the range of these types of projects. And so this now we expect will put us on the map of some of these majors. We've already had discussions with some of them as a sulfide project. And of course, the story was, make it bigger, then we can start to talk as an oxide project. Again, this has only been the last 2 weeks. We anticipate awareness of this will grow as we pick up our marketing and start to tell our story more. With that being said, there is further potential for expansion at Escalonas. Escalonas on the left there, you can see the entire drill program to date that has been carried out by the previous explorers. You can see that Mancha Amarilla that I mentioned. Immediately to the south of that main resource. So the Mancha Amarilla has not had any drilling on it to date. Our belief, our geologist's belief, is that this Mancha Amarilla and the main resource are simply one large deposit that has not had any drilling on it. So in the foreground, you can see the main resource that's been drilled. In the background on the left there, you can see the Mancha Amarilla. It's simply one large resource extension, and we need to prove that. We plan to drill later this year 7 holes along the ridge into that lithocap, and that we believe will prove from north to south that this is one continuous deposit, and that has the potential to double this resource in size right then and there, or at least give us good indication that it will double. Now you're looking at 700 to 800 million tons of oxide. This would be, at 400 million tons, this is probably the largest Chilean copper oxide project in development at the moment. At 800 million tons, this would be certainly the largest in development. We also have expansion potential on the skarns, which flank the main resource and the Mancha Amarilla. This has the potential to add 40 to 80 million tons of oxide ore at a slightly higher grade than the main resource, and that would also contribute to growing this resource in size. We released a little bit over 3 weeks ago some surface sampling results. Surface sampling is used to help us identify targets for the future drill program. And along that skarn, we identified one sample which graded at 17% copper. We double and triple checked this sample, and it actually kept getting better. 17% was the initial assay. So we used that one as well, but we did get slightly higher on the second assay. So that really speaks to the endowment of the copper in this region, that this is equivalent of walking through a gold mine and finding a nugget of ground, just a nugget of gold just sitting on the ground. We found basically a nugget of copper there. So this is a a cross-section of the block model, which shows why Escalonas is so suitable for as an oxide deposit. Most of the higher grades blocks sit above that oxide layer, so we're not giving up a lot of mineralogy by ignoring the sulfides, but they still exist, of course. We also have, I'll go back, the 3 targets to the northeast, which we've done some surface sampling on as well. The results for those will be pending, coming out very shortly. Those represent targets for us to drill in the future. And if they are as good as Escalonas, based on the volumes involved, they have the potential to be larger than Escalonas. This could be, and this will be, a project and a mining complex that will be producing copper for many decades once it's in operation. I will also point out that we expect operating costs when we start to think about development of this project to be a lot lower than a typical mine. You think we're sitting here at the top of a mountain, the strip ratio is lower, the mining is easier, you're not digging into a hole and then digging into open pit and then hauling the material up. You're basically just figuring out a way to dump it off the side, and the mountain gravity is on your side. We will be starting a preliminary economic assessment in the near future to start to understand the economics for this project and to put a number into the market. That's something that we don't have at the moment. And so that's, once we have that out there, I think people will start to pay even more attention. But since you guys are taking a look at us now, it might be a good time to get in before that happens. We also have another project that I mentioned, and really, so Escalonas, as great as a story it is only half of the story for World Copper. The Zonia Project is a project in Arizona, which is, of course, another great mining jurisdiction. Arizona has many copper mines currently in operation and historically, so there's very supportive of mining in the region. Zonia is a part of a company called Cardero Resources, which we have entered into a merger agreement with. We're in the process of signing the definitive agreement for that merger, which will happen within the next week or so. Over the summer, we have been working with Cardero and our governing exchange in Canada to assuage their concerns with the merger, to typical regulators, but they have taken their time over the summer. So we are now in the final stretches with their approval basically given at this point to proceed. So what makes Zonia such a compelling story? Zonia was in production in the 60s and 70s and has historically produced 60 million pounds of copper. I think that's an important message when you're looking for an asset, that it actually has produced what you're looking for, and it has a history of that. So the copper exists and it can be produced. Of course, at the time in the 70s, the price of copper kind of cratered a bit, and so the mine shut down. And then over the ensuing decades, a few operators have tried to restart it. It now comes into our hands, ready for us to take it to the next step. It is 100 miles northwest of Phoenix, and it's again in an area of good infrastructure. There's road access, there's a power line near the site, there's plenty of groundwater on site for development. And we're ready to start this project. This is the claims map for Zonia. 50,000 meters has been drilled at Zonia over the past few decades. So there's plenty of understanding of the resource. The silver bullet for this project, and what makes it very compelling for us, is that the entirety of this resource sits on what's called private land in Arizona, which means that the permitting process is greatly simplified. Since none of it sits on public land, it doesn't require going through federal or state environmental protection agencies. It's more going to individual permitting agencies and getting their one-off approvals rather than them working in a coordinated manner to review the project. That means we believe that this project can be in operations within the next 3 to 4 years, depending on how aggressively we can pursue this project. A similar project at this stage that doesn't sit on private land would be looking at a 5 to 6 year development cycle. So when you start to think about the price of copper that we expect to see in the near future, and we want to hit that window very hard and aggressively and get this mine into operation. We also have the potential to the northeast for an expansion target, and this has not had any drilling on it, but our geologists have identified this as a continuation of the mineralogy that suggests that there is plenty of room for expansion or extension once this mine is in operations. A preliminary economic assessment was carried out on Zonia in 2018. At the time, the price of copper they used was $3. The initial capital was 198 million. The after-tax NPV was 192 million. Closer to today's prices, say $4 copper, the after-tax NPV is 450 million, and the after-tax first-year free cash flow is 150 million dollars. So you're looking at a payback now in a little over 1 year. That's very impressive for a project of this scale and size. What is the reason for the impressive cash flows? The operating costs for this project are $1.40 to $1.50 per pound of copper. That, of course, is because it is an oxide project, as I mentioned, the lower operating costs compared to a sulfide operation. As well, there's a 1-to-1 strip ratio going forward, and that also contributes to the low operating costs. This here is a selection of pictures that I like to show. In the top left, you can see the existing leach pad from former production. Obviously, we would need to expand that and get it ready for a new operation, but it just gives you an idea of the terrain is very amenable and suitable to this type of mining. And then there in picture 4, you can see the pit itself for Zonia is exposed. It's already been pre-stripped by previous operators. It's been mined to a certain extent. So it is ready to go as well. We just need the permits and the infrastructure to process this material. In the top there, you can see some of the infrastructure that's in place. So as I mentioned, we're in the process right now of closing this transaction. And yeah, some other corporate development news, our news on the corporate development front. We just listed on the OTCQB less than 2 weeks ago, which has opened up our market to the American investor base, which is 9 to 10 times larger than the Canadian base, and I think more risk taking than typical Canadian investors are. So we're very happy about that. You're getting in very early on this story. And I don't think that we haven't really done any marketing in the United States, which is going to be picking up very soon. We also announced just yesterday a $4 million non-brokered private placement, which will fund G&A and to get us started at Escalonas. As part of the transaction with Cardero, we announced a $10 million raise as part of the transaction. And when that deal moves closer to closing the transaction, we will raise the additional funds at that time. That's basically the World Copper story. I'm happy to take any questions now that you may have.
Okay, very good. Exciting exploration projects, and definitely coming at a time when I think copper prices are going to go up. Okay, I got some questions that were sent in. So one is, I see that you announced a $4 million equity raise yesterday. Is that already taken? And also, what will that money be used for?
A large portion of that has been spoken for, but we are always looking for any other interested parties as well. So it's still open. The money will be used for the near term for general and administrative costs, as well as to advance our program at Escalonas. And then we will be looking to do another raise once we are closer to closing the transaction with Cardero to get the rest of that $10 million that we announced. And then all that money will be used for feasibility studies at Zonia, as well as environmental permitting, which includes baselining on the project over the next year, and to fund the drill program at Escalonas that I mentioned later this year. And of course, general and administrative expenses.
Okay, that raise, is that it's equity plus a warrant?
Yes,
what is it?
Correct.
Okay.
It's a 40 cents Canadian for 1 share and 1/2 warrant at 60 cents. And then there's an accelerator on that warrant. If we trade over $1 for 20 consecutive days, close over $1 Canadian for 20 consecutive days, then we will be able to accelerate that, the execution of those warrants. We trade in the US, I should mention, as under WCUFF on the OTCQB.
Okay. If anybody's interested in that, they just contact the company?
Correct, yes. And we'll send them a subscriber agreement, and they're off to the races.
Okay, all right. What's the timeline for your first revenue producing copper mine? And I guess that's the one in Arizona, right?
Yeah, that would be in Arizona. So Arizona, basically we would start a feasibility study now, would finish that. I would aim either late next year or early 2023. We would also do permitting concurrently with that. At that point, we would make a construction decision. We would go for financing, royalty. There's options for royalty streaming, options for debt, options for pre-sales of the copper for the first 2 years. As supply tightens, more people will be looking to lock that up, and then there will be a 1.5 to 2 year construction period. We'll receive our permits in the meantime, and then we'll be ready for production late 2024 or early 2025. So that is a very quick time frame for a junior mining company. I will say, many companies spend 5 or more years to get started. I will also say that we are looking for assets that are currently cash generating. Of course, those are very early stages right now, but I personally want to offer the market the 3 pillars of a mining company, which is of course production, development, and a blue sky exploration potential. We have 2 of those pillars right now. I want to offer the third, and because we're not content to sit as a single asset land package where we're doing drilling and trying to build it up to sell it. We want to be a major copper producer or a major player in the industry.
Could you sell Stahl to use those proceeds to develop the other 2?
In theory, we could if there was an interested party. Yeah. We are looking at options for getting a party to come in there and help us with the drill program there. Maybe they'll do an earn-in or something, or if somebody were to come and want to buy it, we would be able to sell it. Yeah.
Yeah. How many employees do you guys have now?
Technically, we only have about 5 or 6 employees, but we have a number of consultants, of course.
What's a royalty now on below $4?
I haven't actually looked at the royalty because we're so far away from for that being a concern for Escalonas. I was going to mention that, Escalonas' value is going to increase by multiple fold in the meantime before we ever get impacted by a royalty. And then at that point, we would look at the headwinds of, maybe a 10% reduction in the value of the project many years from now. So I would say, where we are today, we're going to be growing 10, 20 times more. That's a forward-looking statement. I'll knock on wood on that one. But that's what I want to see. And then we'll start to talk about if there's going to be any trim from government situations there.
Yeah. Well, you know what that sounds like to me what Jimmy Carter did with the windfall profit tax. When they saw this big escalation in the oil price, the government always wants their cut.
Yeah.
But what they got to realize, though, in Chile is the mining industry employs a whole bunch of people, right? So it's a big part of their employment base. And anything they do that stops that, I mean, they need to look to their people first. I mean, anyway.
You can't kill the golden goose, right?
Right, right. It's their golden goose. Mining is their big industry down there.
It's almost 20% of their GDP. And I would say that, Chileans are a very very proud country and people, and mining, their expertise in mining is one of the pillars of that, and I think that they will want to maintain it. I'll also say, as you mentioned, Dad, broadly speaking, as we come out of COVID, a lot of governments have already started thinking about where they are going to get the money to pay for all the programs that got us through COVID and will continue after. And Chile is maybe just more aggressively at the forefront of that. I would fully expect many jurisdictions to start thinking about where they're going to get future taxes from. Of course, they may not all have copper, but they'll start taxing their different types of commodities or industries as well. So you'll see a shifting of capital around, and I anticipate it'll all end up pretty much the same way it is right now, regardless of what 1 or 2 jurisdictions do in certain industries.
Well, and I'll remind our people, it's the same way. We got the Democrats now talking about all these additional taxes and stuff on the oil and gas industry.
Yeah.
What they got to remember is that's all going to be passed through to consumers. Anytime you tax any corporation, it is going to be passed through to consumers. So it'll just raise the price of copper. It'll raise, it's going to raise the price of oil and gas. And, they make all these promises. They're not going to raise taxes on the middle class or the lower level people. But guess what? They're the most hurt by increases in commodity prices. The people that are going to be most hurt by the increase in gasoline price from these higher taxes are going to be those people that work for a living and have to drive back and forth to work. So anyway, you already answered. The next question was what project is closest to generating cash, and that's Arizona.
Yep.
So we're okay. Next guy. Thanks, Nolan. Great presentation. I see that WCUFF has 44 million shares outstanding, but the public float, it says, is still 0 shares. Will the company be increasing its public float soon, or has Market Watch got to update their information? And that's probably
I would expect that they need to update their information since our main exchange is the Toronto Stock Exchange venture market. We are 40% free float right now. We have 2 major shareholders at the moment. Wealth Minerals holds 20% and Gold Springs Resources holds 30%. Wealth Minerals and Gold Springs entered into an agreement about a month ago now, whereby Wealth would be purchasing all of Gold Springs shares. That's because Gold Spring was looking to fund some of their more they're more gold focused. They are looking to fund some of their exploration at one of their projects. So they said, we're looking to sell out, and Wealth wants to be involved more. But after the merger with Cardero, Wealth will not hold 50%. But we also have 10% as insiders and close associates that hold. So yeah, we are trading 40% or more as free float at the moment.
Okay. Well, I'm sorry if you hear my dogs in the background. But, anytime a squirrel goes down the sidewalk, we have to. Anyway, let me go down here. Okay. What are your thoughts on government interference in Chile? And I think you already answered that.
In China or Chile?
No, in Chile.
Okay.
Also, it seems like China itself is not a big producer of copper, correct?
I believe they have they produce copper through smelting once they take the concentrate. I expect that they have a good good supply of copper mines as well, but no, they're not a major copper producer. They import a lot of copper. Yeah. They also have a strategic reserve of copper, which is just similar to the U.S. Strategic Petroleum Reserve because it's used in so many of their industrial processes. And they've actually been issuing copper over the last 6 months in order to, actually longer than that, I believe, in order to soften the impact of the rising price of copper. But that is a bullet that is going to be soon exhausted as, they release more and more. So, how long can that continue? And then are they going to look to replenish it later? Probably, right? So, copper is being, or you can look at it and say it's artificially being held down right now by that release. And then once that's done, it's going to be off, right?
Yeah, I tell you, I hate to see politicians use strategic petroleum reserve to try to lower price. It's just stupid. Those strategic reserves are for a reason, and that is if you're cut off from supply because of a war or something, especially in petroleum. I mean, if we have a major war in the Middle East and the West is cut off from that supply, we're going to need every drop of that strategic petroleum reserve.
Yeah.
Net importers. Anyway, let's see. I had a question for. What do you see as the near-term catalyst that would increase the share price? And the one thing I want you to talk about, I know it's your announcement, you just hired a new investor relations firm, and what do you guys plan to do in the near future to get the story out better, I think?
Yeah, so the near-term catalyst, I'll go back and say, as I mentioned, we're not a company that is just waiting for drill results to come in and then, we get a high-grade hole and then we just go put that around the market. If you look at what we've been doing over the last few months and what we're going to be doing in the near future, we're pushing forward on many different fronts: OTCQB listing, updating our resource statement, planning for a drill program, merging with another company. It's just, the news is going to come from many different angles. And I just want to tell the listeners that don't sit and wait for, one piece of news that you're expecting, because there could be something that we announce within the next week or so that is, a good development that will surprise you. With that being said, definitely the near-term catalysts are a preliminary economic assessment for Escalonas, which will get a number into the market that we can start to put an anchor into people's minds for. It's the expansion of the resource through the Mancha a Maria that would potentially double this resource in size. It's the closing of the transaction with Cardero Resources. It's the starting of the feasibility study and the permitting process for that. And it's some of the plans and things that we're looking at that I can't even discuss because they're not public, that could come. And they are, potentially, there's a good probability that there could be something coming down that pipe as well. I want to touch briefly though on the importance of something like a preliminary economic assessment for Escalonas. There's a company we consider our peer or a peer-ish company in Chile. They're a Canadian company as well. They're called Marimaca, which many of your readers or listeners and viewers may have heard about. They are a company with a project in Chile that has a preliminary economic assessment completed last year, and their resource is 131 million tons, grading at 0.47%. So just to go back to our resource again, ours is 426 million tons, grading at 0.37%. So we're 3 times larger than their resource on tonnage, with the potential to expand double that, and their grade is slightly higher than ours. They're currently trading at $350 million Canadian market cap in Canada, and we're trading in the $20 to $25 million range. Again, in the last 2 weeks, we just put out this news here. This project is one of the largest will be one of the largest oxide copper production targets going into a development story once we start our PEA. And it's going to be getting that message out there that, we should be viewed as an oxide project now, no longer as a sulfide project. And just stack us up against a company like Marimaca, and you can see that we're significantly undervalued for the resource that we have here in place.
This $4 billion raise that you just or you're closing now, what will that cash carry you for the next year or so? How long will that go?
Well, that cash will carry us for the near future. It's mostly a G&A raise, and also to make some payments at Escalonas and get us started on a preliminary economic assessment. As mentioned, the goal is to close the transaction with Cardero within the next couple months, and then do the larger raise, and then that will take us to the end of next year. If for some reason Cardero didn't close, then we would reevaluate the situation, and likely the $3 million would be enough to get us past the drill program at Escalonas. But really, in the near term, it's just to get us continuing on. We wanted to have the transaction finalized with Cardero, but as I mentioned, the delays from our review with the Toronto Stock Exchange venture has kind of pushed us into a situation where we just wanted to get some money into the bank and comfortably operate for the next little bit.
Okay. What's the Capex cost going to be to get the Arizona mine up and running?
Yeah, so the last indicated preliminary economic assessment was 198 million. That, of course, will come, the discussions of how to finance and fund that will come over the ensuing year once we've closed the transaction and started down the feasibility path. But there's many options available. As I mentioned, there's streaming, royalties that you can sell. There's liquidity depending on the price of our shares. There's debt financing. There's options to partner with larger investors or funds. That's something I would say, you look at Marimaca, they have 3 significant funds that back them. We currently don't have any funds. We've only been listed for the last 7 months. So we're really actually early stages. We are open to strategic partnerships as well that will assist us with these types of ventures, but that's a discussion to happen. I would also say that as we move through the feasibility study, if you have any engineers who are experienced with that listening, that understand that a preliminary economic assessment is often done kind of on a comparative basis. You're using large assumptions. Once you start doing actual design and engineering work, you can narrow down your specifications and needs, and then you can start looking at the used equipment market, which is quite large in Arizona. And we anticipate being able to trim $20 to $40 million off that initial capital quite easily, especially on the mining equipment, which there's tons of it lying around, right? But that'll only come out through the feasibility study.
Okay. Yeah, I would think, I mean, this is kind of like, an exploration company in oil and gas, and then you make a big discovery, but it's, these horizontal wells cost $10 million to drill and complete. So you got to go raise the development capital after you prove up the reserve base there.
And,
so that's exactly what it is.
Yeah, that's the model for a junior mining company, especially a Canadian one. You raise enough money to do drill programs, get the results out. Things like our updated resource statement start to make the market aware of it, attract new investors, and try to minimize dilution along the way, of course.
Well, that's it for the questions. I'll tell everybody, if you have additional questions, you want to email them to us, we'll send them on to Nolan. And I will remind everybody, we've done quite well on some of these Canadian juniors, and it's the same story. You get in early, you ride it, and when they start proving up these resources and bring in some well-known partners, it can be quite a catalyst for the share price. And, with these metals like copper, nickel, the things, I would tell you right now, I get all these articles on electric vehicles and everything, and we just do not have the materials. We're going to have to find a lot more copper, a lot more nickel, a lot more, lithium or whatever to make all these vehicles. They don't just make themselves. And that's something that people need to understand. So that's it for now. Nolan, I'll have Sabrina can end it now, and then we will trim up the recording and take out that little dead space there.
Of course.
And fill that gap, I guess. And then it will be sent out to our members this afternoon, the link, or early tomorrow. And then it's just for EPG members on YouTube for a couple of weeks. And then after that, it basically is open to anybody. And we will send you the link to the recording, and you're more than free to shoot it out to all your contacts, because it's good exposure for our group too, Energy Perspectives Group. So anyway, thank you so much for hosting this, and we'll definitely stay in touch. And World Copper is going on to my watch list, that's for sure.
Thank you, everybody. Very happy to have been here.
Okay, thank you.